I think within tech, it's very much a case of where do we see those kind of second and third derivative plays, both inside the data center and outside the data center.
Is it too early to be looking for those second and third derivatives, or is now the time?
We don't think so at all. So I think particularly in the industrial space, outside of the data center, as you move from GPU clusters, 300,000 to 1 million, kind of the way that these data center architectures are put together, the way that data center cooling is done, the impact on the grid, we think these are all quite investable themes. I think inside the data center, you've seen in the last 5 years, you've seen GPUs see kind of a 5x improvement in performance. All these GPUs need to be linked together, and the networking around that does that, and that's only seen kind of a 4x improvement. And so those roadblocks are typically quite good places to invest in tech, and there are lots of investment opportunities inside the data center investing in things like networking, memories, and other big roadblocks, storage as well. So those are all big themes for us that we can invest in around the AI space.
Is that based on the assumption that huge capex spending, around $200 billion from some of the hyperscalers this year, that capex spending will continue even as those question marks become more prominent around monetization? That capex spending continues into 2025, through 2025, and how fundamental is that view underpinning your broader take in terms of those second and third derivative effects?
Yeah, I mean, it's absolutely fundamental. I mean, though hyperscalers are kind of 50% of Nvidia earnings, I think what we have seen in 2Q earnings is this divergence between investors increasingly questioning the ROI. I don't think that's the right question to ask, and management teams saying this is existential. We must invest in this regardless of returns. And you've had them, Satya and others, in various ways saying the risk of underinvestment here is far greater than the risk of overinvestment. Now, to your question, that does introduce the risk. Next year, I think visibility is very good. The year after that, the history of semiconductors suggests that you do get these digestion periods. And in the future, that is reasonably likely as you get those periods. But certainly what the market is saying, or what these CEOs are saying, is we are going to continue to invest. And if you look at CapEx forecast into next year, there's a strong move up again in CapEx. And the problem here is not demand. The problem so far has been supply, which again that was one of the good things about Nvidia results, which is that both on the supply side, both on Blackwell, which has been a big concern for the market, it was quite strong in the commentary, and also on the CoWoS supply, so on that kind of TSMC supply that's been a big problem. That also seemed quite positive.
Okay, that's really interesting. So you have that visibility into and through 2025. 2026 becomes a little bit more hazy, maybe. You touched on the grid upgrade because, of course, the energy component in this is really crucial given the demand for these data centers. How are you thinking more specifically about investing around the grid upgrade that is going to have to happen to support this technology?
Yeah, so first I think it's a global phenomenon, so you can invest globally. It's not just in the United States around this. So the industrial space in particular is quite interesting. I mean, if you look at things like new data center architectures, you're having problems around kind of GPUs melting, and that's hugely problematic on what are very, very expensive data centers. And so particularly in Taiwan, I was in Taiwan a few months ago, in the industrial space, you're getting new data center cooling solutions. So you're moving from something called air cooling to liquid cooling. That's really interesting. And then on the grid itself, there's estimates out there that are pretty punchy, but the US is expected to add something like the electricity consumption of Spain to its grid. Now, in the US, with an extremely old, underinvested utilities infrastructure, that's problematic. And so you've got this double whammy of reshoring, where that's prompting a rebuild of the capital base in the US, alongside AI coming along and putting even more pressure on the utilities space. So there's kind of this double whammy on that part. Industrials have a role to play on the cooling side, but also how these data centers are all linked up. You're seeing far more geographical concentration in data centers as well. The grid isn't really set up for that, so you're seeing kind of more concentration in parts of the US, parts of Europe as well. So there's a lot of kind of re-architecting that needs to be done, which is going to take 5-10 years.